All right, welcome back, everybody. Exciting week in stocks. The Dow hit an all-time high this week, 36,000 points. That's awesome. I hope you guys are invested in a time and place where you can capitalize on these increases in the stock market. And if you're not, why? Why are you not investing in the stock market? Are you scared of the stock market? What's holding you back? I hear all the time, well, I know a guy. He was in 1987. The stock market crashed. He lost everything. Well, a couple of things probably happened there. He probably wasn't diversified enough. Probably had all his money in a specific stock. Company goes out of business. You are going to lose everything if that's the case. You're not diversified enough. Secondly, he may have been in a company that was still in business, but had a hard time and sold after the crash. You can't buy high and sell low. You just cannot do that. If the company you're invested in, you believe in them, stick it out. You've got to believe that they will turn a corner. Don't be scared of the stock market. If you believe that it can drop, you have to believe in the positives too. And if you do any research, the positives far outweigh the negatives. The return on investment, including the down years, averages 10% a year over the last 100 years of the stock market. You have to believe in that. There will be downturns. They will happen. You have to flow with them. In fact, in March of 2020, the stock market had the 3 largest single-day drops in the history of the stock market. From the middle of February till the middle of March, stock market went from 29,000 down to 20,000. 37% loss in about a month. It was a trying time for stocks. I had a lot of people ask me, are you going to change your investments? Are you going to change the way you do things? No, I'm not. If anything, I'm going to buy more because it's a buyer's market now. Everything's cheaper. Everything just went on sale. So that was the time to buy. In those 20 months since that time, my investments are up 99%. That's huge. In a 2-month period or 2-year period, that's huge. 99% increase. It's just crazy how much the stock market can rebound. And the best part is, if you are investing on a regular basis and you are doing those weekly or monthly investments, you're buying cheaper when those stock market adjustments happen. And then when you do start seeing the stock market retrace and start going back toward a positive, your increases happen faster and faster because you bought shares at a cheaper price. So when you were buying shares at 70 cents on the dollar, all of a sudden you start seeing really big increases. So take those opportunities. When the fluctuations happen, you've got to invest and you have to ride those out because they do pay off in the long run. So people ask, is it a bad time to invest when the stock market is at its highest point in all time? I've heard this forever. I heard this at 10,000 points, heard this at 15,000 points, heard this at 20,000 points, 30,000 points. It's at 36,000 points now. The difference between those things, to get from 20,000 to 40,000 points in the stock market is a 100% increase. To get from 36,000 to 40,000, 11% increase. So 11% away. Stock market, again, averages 10% a year. It's going to get to 40,000. It's going to get to 50,000. Going up by 1,000 points at this point is less than a 3% increase. Those increases happen faster and faster. It's not optimal to buy at the highest point in history, but there will be a new highest point in history. And do you want to be invested now, or do you want to be invested at the next highest point and the next highest point and the next highest point? If you aren't investing already, it's always a better time to invest now than the next high. Let's talk about the other reasons you might not be investing in the stock market. You see the stories of the meme stocks like GameStop, where somebody throws $1,000 into one stock and they make millions. And you're like, wow, maybe I should do that. And you end up chasing the stock that's already gone up enough that the profit's not there anymore. And then you don't see that return and you bail out and you say, stock market's no good. It doesn't work. Don't throw all your investments in one basket. Go ahead and diversify. Get a mutual fund, get an ETF fund, get something that diversifies. Maybe it includes some international, maybe it includes some bonds, maybe it's all stocks, maybe it's stocks that give dividends as a return on investment. You can decide that with your financial advisor. It's okay to shoot for those cryptos or those meme stocks that potentially go way up, but use that as part of your diversification. Don't put a large percentage in there. I do have crypto in my portfolio, but it's less than 1/100th of 1% of what I have invested. So there's not much there. There's not much potential for loss. There's not much potential for gain, actually, because I don't have a lot invested in it. But if it goes up, it's going to go up substantial. And if it doesn't, it doesn't. That's okay. We just don't want to be putting all our eggs in one basket. And then when that fails, go, this doesn't work. It does work. You have to diversify, get with your financial advisor, and get money invested. So I personally know somebody that won the lottery. I personally know somebody that won 20 million on one pull of a slot machine. Those things happen, just like crypto, just like meme stocks. They do happen. But if you're chasing that, if you're the next person to pull that slot machine because you saw somebody win 20 million on it, you're not going to win it. If you chase the stock that's already skyrocketed, you're probably not going to make any money. Make sure you're putting your money where it is going to still have a future, room for growth, and it is not a dead stock. If you want to go a different way than what I suggest and what I do, great. If you succeed, awesome. I want everybody to retire early and succeed. And if you go about it a different way and you get there, more power to you. I'd love that. But I just want to help the masses. And diversifying into mutual funds and ETF funds is how the masses get there. All right. Good luck.